By Trideep Bhattacharya is with us. He's president and CIO of equities at Edelweiss Mutual Fund. Trideep, do you own any of the names, IGL, MGL, Gujarat Gas? And is it a bit excessive? 10%, 12% cuts today. What's your sense?
Yeah, I think, first of all, thank you for having me on your show. I mean, as the proximity to elections, as you pointed out, is one of the drivers, but also I think this shows the pricing reforms that were due to happen is finally flowing through. Fortunately, we have none of these. We are actually we hold some of the upstream companies in the oil and gas segment, and in general being underweight the oil and gas space. So by and large, our portfolios are relatively have escaped unscathed from today's price move, if you may say so.
Hi Trideep, good afternoon and good to see you. I think a couple of your portfolios are tilted towards private sector banks. Their time has come, you believe?
So clearly, valuations are in their favor, and that's one sector which is actually kind of not done particularly well in the past. So we would and hence they are rallying on the back of this. But actually, what we find is financials, particularly which will benefit from potential global rate cuts and in a rate cut regime, would actually stand to do better if you take a slightly longer term view of the 12 to 18 months time frame. The expectations heading into the results for banks were on the lower side, and against that, the numbers that have come so far are just about a tad better. So I think a mixed, and that's the reaction that you are seeing in the share prices today. I mean, more generally, this result season has been more about where expectations were pegged at and how the results were turned out, how the results turned out to be, more than in absolute terms. You can see the case in IT and in the positive direction, and in negative direction, some of the stocks which had high expectations priced in.
What about Bajaj Auto? It's a part of, I think, your FlexiCap fund. It makes it to some of your funds. What did you make of the kind of, what the management had to say about the festive demand? Some people believe the comments are a bit misconstrued, and therefore they would use the opportunity to go out there and buy it if you have a longer term view. How would you approach Bajaj Auto and what we've seen?
Yeah, so I think this is what I meant heading into this result season. Two-wheelers in the context of autos had done particularly well. And some of the stocks were quoting at meaningful valuation premium. And hence, on the back of that, when their comments on festive season weren't particularly kind of taken constructively in the context of the street, and all the premium that the stock enjoyed got taken away in the course of a day. However, it is a little Bajaj Auto specific, given that it is factual number. Two-wheelers as a fact would still continue to do well relative to the autos, and hence, given this opportunity, we have taken advantage to probably add to two-wheeler sector in general. But within that, we are mindful of which stocks we go for.
By the way, the other pack is this entire wire and cable pack, which generally is lower. Polycab spoke with us today. It's staged a very smart rebound. KEI, I think, still under pressure. Havells there as well. Amongst this sort of again, I mean, the context is that all these stocks have done so well, right? That's essentially the backdrop. Do you own any view here?
Yeah, so I think we own some of the stocks that you mentioned. Can't get stock specific though, but I would say that fundamentally speaking, things are headed in the right direction. It's a question of where the expectations got to. I think the expectations with regards to margins, particularly, despite companies' guidance of being in a narrow range, went ahead of themselves. And hence, in this quarter, whether you look at all the three companies that you talked about as they reported, they talked about commodity pricing related margin impact, and hence the shares took a knock. But what we draw comfort from is that if you look at the wire and cables component of their revenues, that did quite well in high double-digit growth rate. That means that the underlying economic momentum is in the right direction. The commodity price movements take a bit of time to flow through the financials as they are passed on, and hence will come through in subsequent stages. So structurally, we are positive in wire and cables segment from a medium-term standpoint. The stocks have done phenomenally well. Opportunities like these are actually welcome for investors like us to increase our positions in the right ones.
All right, Trideep, what are you making of the two big IPOs that have been announced? One is Hyundai and then the other one is Vare. You know, on Hyundai, people are a little skeptical whether or not it will get subscribed. It did get subscribed. Do you think it's a case that could play out, that it could have a subdued listing and then, you know, the stock could do well from there? Unlike what we saw with Bajaj Housing, that had a blockbuster listing and the stock has come off from there. Any view on, you know, the Hyundai IPO as well as Vare? So much of excitement about solar modules, solar cells as well. And it appears the companies have a bit of a runway. How much of it is in the price is the issue? Your take.
Yeah. So my sense is investing is actually better done once staying out of excitement. With regard to some of the auto stocks which are getting listed, we have a fairly comparable stock which are in the listed domain, have been listed for a couple of decades, which are quoting at a meaningful discount. So, you know, we generally tend to take a more sort of deep-rooted view with regards to these things as to if there are better alternatives available in the markets which are listed where we have the track record. We tend to go with them rather than live with the excitement. Again, on the renewable energy side, we are looking for cleaner plays, so to speak, to take exposure. And again, some of the IPOs that you mentioned are coming through in that domain, particularly make it interesting. I can't get stock specific here, but I think all of these, the 2 points that I would make to your viewers is that while these are new areas, I think cash flows and valuations are 2 parts that we look carefully. In renewable companies, the companies that make cash flows are the ones that we are more positive on. And valuations, if we find a listed company which has been there for a good while versus a new IPO, we would tend to stick with the old war horses because they seem to have seen few more wars.
Okay, Trideep, thank you very much for joining in. Thank you for watching CNBC TV 18. For all our top stories and news updates, follow us on our social media platforms.